Welcome to another edition of Chart Check, where we look at stocks where there is convergence between the technical patterns and the fundamental setup. So as usual, I have two stocks for you today. First up, we look at a stock called Radicokhaitan, which is in the IMFL space. Most of the liquor stocks have been doing pretty well in recent time, what with UBL, staging almost new highs. United Spirits back in demand. So similar has been the case with Radicokhaitan. Stock has been in great demand over 2016 and 17, surging up to new highs. Great breakout from from the base. But what is really key about Radicokhaitan is that during the pullback and the corrective patterns, the volumes have really dropped off, indicating that people are quite unwilling to sell the stock in spite of the fact that there has been large gains, and that could be attributed to steadily improving performance. Q3 results were exceedingly good, and what the company has guided is that they'll be able to maintain double-digit earnings growth. Now, you don't really get too many stocks right now which are able to make that kind of forecast, and when it comes from a consumption-led stock like Radicokhaitan, and with the fact that there is very consistent volume growth, there is now premiumization which is kind of kicking in, because in the liquor business the premium segment is what really brings in the additional profits, and the correction therefore is seen as a kind of consolidation. It's not really a damage in prices. So I think the way the stock is poised with the kind of tailwinds they have with respect to the raw materials leading to much better margins, I think a breakout to new highs is very likely, and it should probably take the prices to about 590. Currently, stock is trading down at about 420, which is at the top of the range that the stock has been maintaining for a while, between 440 to about 330. I think the stock is well positioned to stage a breakout past 440, and we are looking at therefore something like 30-40% to the upside from the current levels. Moving on, we have a second stock for the day, which is Syngene International. Now, Syngene International is in the CRO space, which is custom research organization, which is largely concerned with R&D outsourcing. Now, pharma stocks have been facing a lot of problems with their R&D work. Now, you can see that very steady trends have been prevailing for Syngene ever since it got listed, right? Now, what Syngene has done over the period of time is sign up a lot of international players, and they are really capturing a big chunk of the R&D outsourcing to India. Now, this R&D outsourcing as a business itself is now growing by leaps and bounds, and India is capturing a lot of it. And within that space, I think Syngene is one of the leading players. Currently, the fact that the stock is into a capex mode, they have announced something like $200-300 million worth of capex. That clearly shows that they are really scaling up to handle the new amount of business. All these factors are, I think, creating what we can call as a cup and handle pattern formation across multiple months and years. So this is a very bullish kind of formation, and once there is a breakout past about 625, which is a well defined kind of resistance area for the stock, and the stock is making a base higher and higher, as could have been seen on the chart. The momentum indicators are kicking in, which is telling us that there will soon be an assault on the 625 resistance. I think the stock is well positioned to stage a breakout past it. We could therefore look for a price target which should be considerably higher from the current level. I would think at least a 20% gain from here, taking the stock to somewhere around 770, 800 levels is very much possible for Syngene across the next 6 to 12 months. These two are stocks for the longer term, and such investors should definitely take a look at it. And this is a stock which these two are stocks for medium term kind of investments, Radicokhaitan and Syngene International.